Day Trading Education by Nexgen Software Services, a Fibonacci add-on for NinjaTrader's platform. Please read the disclaimer. In this video, we're going to discuss trend trades and recognizing the correct trigger line looks on our charts. So when you look at your 14.2 and your 8.2 chart and you see your small triggers physically above all of the other triggers and going up, we have the prime look, number one trade look for trend trades on our 5-1 chart. Just a little further, you can see, and I've kind of exaggerated the arrow on the 8.2 chart, where the small triggers are physically below the large triggers on the 8.2 chart, and we've got quite a bit of a gap back to the support at the midband. With this look on the 8.2 chart, it's very common to have a deeper retracement and more than a 1 bar down retracement on the 14.2 chart. So it's important, not that you can't keep taking long trades, but sometimes you get more than 1 bar down on the 14.2 chart. So you need to look a little further down before you start taking long trades again. Subsequently, you can see that our small triggers get back above on the 8.2 chart. Once again, we have the prime number one look for taking trend trades on our 5-1 chart. Now we're going to take a look at the 8.2 and the 5-1 at the same areas. You'll notice on the left side, the 8.2 chart, we have the number one look. And on the 5-1 chart, we have a perfect trend trade long rules met at the midband and the Fibs that went up for 20 ticks. On the 5-1 chart, you'll see we had a double divergence and the 8.2 chart starting to not agree with the 14.2 chart. However, the 14.2 chart says it will still go higher. So what the market does is a little deeper retracement on the 8.2 chart to the midband, which also happens to be Fibonacci support on our smaller chart. Then once the 8.2 chart gets back above again, we have another high probability trend trade on our 5-1 chart that obviously takes us up to the next Fibonacci resistance. So what we're going to do is we're going to look at some live trend trade situations and do a 3-chart comparison between our 14.2 chart, our 8.2 chart, and our 5-1 chart so you can recognize the proper looks for high probability trend trades. All right, so that leads us into this look right here. Look at your 14.2 chart first always. The small triggers are up and physically above all of the other triggers, and we're coming off of Fibonacci support. On the 8.2 chart, the trigger lines are up and okay. And then you can see over here on the 5-1 chart, we've just reached the entry spot. Midbands, Fibs, and this is the trend trade rules. So again, just to kind of recap the trend trade rules. Trigger lines up, background green on the 5-1 chart. Both the 14.2 and 8.2 chart agree, and our Fib to Fib oscillator at the 25 when it's green and we're going for longs, or the lower 25%. Obviously, vice versa if we're going to the short side, which we'll take a look at. One of the other nuances that I really want you to pay attention to, and one of the things that I think a lot of new users get a little confused on, is which areas should I be entering at? And just a quick rule of thumb for you, or a quick reference, look at your 5-1 chart. And at the time we make the down bar, the first bar going to the downside during the retracement back to the trend trade long spot at 44.66. If the small triggers on the 5-1 chart are physically above all of the other triggers, we're going to use the first midband or Fib areas that we get to. And if there's a choice between the midband and the Fib, pick the farther one away. So if the Fib was a little lower than the midband, use the Fib. If the midband was a little lower than the Fib, use the midband. So whichever one's a little bit farther away, use that one. But the first cluster of support areas is going to be our trend trade. You'll see later we'll look at some examples where the small triggers are physically inside of the 14.2 triggers. And when you get them inside the triggers, typically you're going to make a deeper retracement, and you're going to have to look at the second or third areas for your trend trades. And again, you really want to use large chart areas, and you can see on this trade to the long side, not only do we have our trigger lines going up across the board, but we've also got multiple time frame Fibonacci blue support, very strong small triggers above everything. This is a really good look, and there's not really any reason whatsoever to think that we're not going to go higher. One of the other things that you should also notice, and again, this comes from a little bit of experience, but notice that the Fibonacci support on the 14-2 chart didn't break. It actually stayed blue. And down at the bottom of the 14-2 chart, we also had divergence, this negative number down here. Typically, when we have divergence from support, even if we overran it by a little bit and the small triggers roll up, we've got a really solid bottom in place. And generally what's going to happen is we're going to go all the way back up to the highs. And we're going to go stop out the prior high pivot. So realistically, we should go up to 44.95, at least somewhere up in that area. And you can see we've got a lot of multiple time frame fibs there. Now, again, the objectives for what we do is, 20 ticks. 20 ticks equals $200. And if you do that twice a day with high probability trades, you're going to be able to reach your goals and objectives very, very easily. So again, if you were long from 44, 67, 68, you can see we have easily reached our profit target of $200 and plus $200 plus. All right, so let's go in and we're going to take a look now. Obviously, the market had gone up and we put in a top. Notice divergence at Fibonacci resistance at the top. Again, there might have been some trades short along the way, but we're going to focus now on this trend trade short. And again, you can see all the triggers are down on the 8-2 and the 14-2 chart. And you'll see that we've got mid bands and fibs right here on our 5-1 chart. So 44.74 areas where we're looking to take or initiate that short trade. And again, with that 44.74 area, the mid band and the fib basically come in right at the same spot. So with the 14.2 breaking Fibonacci support and the 5-1 down and the 8-2 down, really high probability look that we're going to take it to the downside. Now they had just missed us, but they'll do this a lot sometimes where they'll just miss the area. And because we're coming off of some support with divergence on the small chart, we'll actually get to the area. So you'll see we're really looking at a window from 44.74 potentially up to about 84, but realistically, again, fib and midband is where we're looking to go. So again, let's just say we had a limit at 44.74, give or take. Again, that's our area, and you can see we've just now really reached the area where we want to get in. And, again, we went a little bit higher. Not surprising that we made it up to about 83 or so. You can see the 165 EMA there. Again, the overall expectation is that we're still going to go to the downside. And even if you sold 74 and had a 10 tick stop in there, you're still in your trade. You've gotten your pivot to the downside. And again, this is a real good example of if you were short at 44.74. And again, look at the 14-2 chart. The 14-2 chart leads everything and says we're absolutely going to go down. Again, we had to fade a few ticks of heat on that one. But again, if you had even sold 44.74 in a limit or, perhaps used the market flow for an entry, might have gotten a little bit higher. 44.74, let's just say, was your number. And, at this point, as you reach the prior low with divergence, you've got to break even in. The large chart expectation is absolutely we're going lower. So we shouldn't have any problem seeing another push to the downside here. And again, keep in mind, this is really second trade. Super, super high probability with all of the trigger lines really helping us at the time of our entry. And again, the 8-2 overran just a little bit after our entry, but that's okay. That's going to happen from time to time. And you can see if we were short at 74, we just reached our 20 tick objective. And had you have reached your 20 tick objective, this is your next trend trade. So again, I want you to look, again, you're going to be faced with this live. Look at your 8-2 chart. What does your 8-2 chart say? Does your 8-2 chart say we're going to go higher? Yes, it does. See that? So we don't want to do a trend trade short from 44.68. We're going to end up losing that trade. When the 8-2 chart says we're going to go a little higher, really start looking at 74 and 77. And then, you'll not only have the mid band on the 8-2 chart, because look, you have to start again on the left. 14.2 chart says we're going down, period. So again, remember what we talked about, whether you have a mid band or a fib. And you can see if you had a limit order at 73 below the higher fib, again, if you have mid band and fib, use the higher of the two. And because your 8-2 chart says we could go a little bit deeper, you don't want to sell the mid band on the 5-1 chart. So again, if you sold 73, a little bit higher, maybe it could go to 77. And again, you've got to keep in mind, 74 to about 77 is a window. And again, anything inside of that window is okay to sell. And, it has to be predicated with 14.2 chart absolutely says we're going down. And again, the 8-2 chart, I think you can really see the difference here between the first trend trade short, which we very easily made 20 ticks, and then, this market trying to work its way a little bit higher to that 74 to 77 window because of what the 8-2 chart says. And again, it's not that we won't go down. The 14.2 chart says we're going to go down. The 8-2 chart says we're going to go a little bit higher. And again, this is where the 44 to 77 window, which I think is pretty clear here, and provides lower risk and better opportunity for the continuation to the downside. And again, this is one of those things that you just have to see 1,000 times. And the more you see it, the more you're going to get comfortable with it. And again, it's just really important not to sell the mid band in this situation and really look towards some of your higher Fibonacci and 165 areas on your 5-1 chart. And then obviously once you push back down into the 59 area, you can really have your stop right above that 44.76. Because if they go back up there again, we're going to have to really worry about the situation. And you can see with a new pivot to the downside on your 5-1 chart, you can really trail your stop above 44.70. So again, if you got in at the right spot at 44.74, not only do you have no risk here, but again, you've just reached your 20 tick profit target objective again, and ultimately, closer to 30 ticks here. But again, pretty easy read for another 20 ticks to the downside. And again, you have to notice immediately we're into look at your 8-2 chart. Our small triggers are below again, and we are now back to our mid band and trend trade short spot on our 5-1 chart. So not only did we break the fib on the 8-2 chart, but look at our trigger lines on the 8-2 chart. Small triggers are below the large triggers. We should be short again from the 61 area. Notice the small triggers are way down and all the triggers are down and everything has broken, and we have really the perfect look on our 8-2 and 14-2 trigger lines for yet again, immediately, bang, 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 just another trend trade short. And again, when the market starts to trend, you'll see this happen, where you'll get 2 or 3 or 4 trend trades in a row. And, this pattern of really, really strong look on the 8-2 chart, followed by a little deeper retracement on the 8-2 chart, followed by, a breakout of the area and a changing of the 8-2 trigger lines again to really put you in a situation where, it really says, hey, you need to get ready to do one more trade. And again, you can see if we went short, around the mid-band area, 62 to 64, kind of the window. We had all of the rules met, and essentially, all three charge trigger lines say it's okay. The only thing that's working against us here is the potential for divergence. So as we watch this, really what we want to see here in this situation is one more push to the downside. The 8-2 fibs and triggers say that's going to happen. The 14-2 chart says that's going to happen. And if we can push down one more time, it'll give us, again, another 20 ticks, number one. And then you'll start to see the potential for your trigger lines to kind of transition on the larger chart. So we'll see. I don't even know where our next fib support is on the 14-2 chart, but usually when all the small chart areas break, we're going to make it to the next fib on the 14-2 chart. So we'll stick with this, and you can see very quickly down here. So again, if you were short at 62, very easily into the next 20 tick profit target there. And then now we've got a different situation. Notice on the 14-2 chart, we hit a prior divergence low at 44.40. And anytime we trade back above a prior divergence low, trend trades start to lose the ability to win. It's just one of the situations where, that's where we stop taking trend trades on the 5-1 chart. And you'll see why. More than most likely, we're going to at least make it up to the mid band on the 14-2 chart. So you'll notice, look at your 5-1 chart very quickly. We change the trigger line and the background color back to green. Notice on your 8-2 chart, we also change very quickly as well. So again, this is a real good example of doing a trend trade followed by another trend trade followed by one of our stop conditions, which is trading back above a prior divergence low on the 14-2 chart. And again, I just kind of want to stay with this because it's such a good situation. Knowing when to stop taking trend trades is really paramount. Fibs, prior divergences, and multiple time frame divergences all help us with that situation. And again, you can't really take a trend trade long here on the 5-1 chart. Again, you can see that we have a trend trade long look on the 5-1 chart. Again, just trading into fibs and mid bands on the large chart again is one of our no-nos. So as you can see right here, we've broken through the fibs and the triggers. So now we can look to take another trend trade to the long side. And again, 44.75 sounds like we've said that number a couple times to the downside. Probably going to be the area where we start to bounce to the upside. And again, not a very deep retracement there. You can see that, again, this is a very quick market and a very quick situation. Notice, even if you didn't get the trade, again, recognizing the proper look, still key. Notice the trigger line strong on all three charts and what the market did after that look was true. All right, now this situation is going to be a little bit different. Notice that the small triggers are physically inside of the 14-2 triggers here. And again, look at your 5-1 chart. We're going to do a trend trade. So mid bands at 33, 34. And, this is your spot right there for an entry. Now, because of two things. Number one, because the small triggers are inside on the 14-2 chart. And number two, because we barely got below on the 8-2 chart. Again, this is where you're still going to take this trade, absolutely. 34 area, give or take a tick or two. What you're going to do now is you're going to manage these trades a little bit differently. So because the small triggers are inside on the 14-2 chart, shows weakening and a potential transition. And because the small triggers are below on the 8-2 chart. Again, if we retest, again, you'll see this on some of the videos. If we retest the 4750 area and we retest the prior highs, if we fail to take out the last high, that's going to be the end of the trade for us. So again, there are trades where on the 14-2 chart, the small triggers are completely above or completely below, and those are pretty easy. Those usually get the follow through. This is a good example of mid bands and fibs, obviously giving you a very good spot for a trend trade long. However, the follow through potential is lessened due to the weakening of the triggers on the 14.2 and the weakening of the triggers on the 8.2. And again, this is one where, if you're long from 35, anything close to the 20 ticks up at 55, you're going to have to, again, be very cautious about the trade. Again, we're not, worried about the trade. Worrying about the trade doesn't matter. It's the management of the trade that matters. And again, this is one where as you start to creep up towards the 4750, 4755 area, you'll notice on the 5-1 chart we have divergence potential. And again, we can keep going to the upside, but you'll see the little yellow evals, which means you've hit a prior high and you've got divergence potential. And again, this is just a situation where, just because of the weakening of the triggers on both of the larger charts, we have a tendency to fail up there. And if we do fail, like you see here, we're not going to take any more trend trade longs because we typically will go down at least to the mid band on the large chart before we kind of revamp and figure out whether we're going to continue higher or not. Once we make it to the mid band, like right here, I guess we'll keep going. This is a perfect example. Look at the strength of all of your trigger lines going down. We absolutely, we're going to get a bounce here, but because we had divergence on our charts up there and we had a really strong weakening, and because look at your 5-1 chart right now, no divergence on the lows, we're going to take one more short. And you can see 31, 32, as high as 37, but really 31, 32 is kind of the spot. So there's your window for a short if you're going to take one. And again, you got to keep in mind that your fib is a little bit higher, so not surprised to see 36 area right in there. And again, the target, there's two things. Number one, we don't want to take out 47, 42 by much. But you can see even during this retracement back up to Fibonacci resistance, look at the 8-2 chart. Small triggers are way, way, way below, which shows a lot of momentum to the downside. And anytime you see no divergence on the 5-1 and a lot of momentum to the downside, usually you're going to get at least one trend trade short. Ideally, if the market would do it for us, we'd like to see the market go back to Fibonacci support down there at 4703. Again, 20 ticks from the, 32 to 35 area is going to be, well, we just basically almost hit that, didn't we? And you can see pretty straightforward right there. All the triggers on all the charts are down really, really strong. And, it gives you a trend trade to the short side. So again, not terribly surprised with that one. Now you can see we've got some divergence on the 5-1 chart. And again, the question always becomes, should I get out? And then, usually if it's an iffy situation and you've got some support on the big chart, yes, you should get out with divergence on the 5-1. However, usually you see this prior divergence up here, you can pretty much put a limit order at 38 or 39 and you're going to get a second shot at the same trade. So usually when you get this divergence on the 5-1, we're going to stop out the prior high pivot over here on the 5-1 chart. And again, that's a perfect look with, the pivot stop out on the 5-1 chart and the 8-2 chart. You'll notice that the trigger lines on the 8-2 chart said that was coming very, very clearly. So you get the first trade and then The 8-2 chart says you're going to get a pivot stop out, which we got, 38.39. And now, realistically, if you're short from 38 or 39, give or take, you've only got 5 ticks risk. So again, this is it's a little bit of a different situation where, we're using the fibs and we're using one-to-ones and we're using the strength on the 14-2 chart to take trend trade shorts. And you can see the divergence caused the pivot stop out pretty much, as the 8-2 chart said. And again, if you were short from up there, you've just reached 20 ticks again. All right, so we're going to pick it up just a little further. Obviously, it went a whole lot further than 20 ticks to the downside. And you can see we now have strong down on our large chart. We've also got a transitionary look on our trigger lines. And we've got fibs and midband on our small chart. Now notice with the divergence down here at the bottom, we're looking to sell the midband. So 46.72, give or take on a limit order is kind of what we're looking at as far as trend trade shorts. And again, if we don't pull back to the midband at least, then it's really hard to take a trade. You can see obviously we got to the fib, but because of the location of our small triggers and our divergence, we're anticipating the midband to be the entry area, not the fib. Again, if it runs without us, then we're just going to have to miss it. And again, this is why. You can see now we've made it to the midband, so short trade would be on. And again, transitioning on the large chart a little bit. So again, let's just call it 46.70, and very quickly, there is your 20 ticks profit. Now, notice, once you get the 20 ticks profit, again, it's moving very quickly, but we've got a transition on our chart. So with the transition, look what happened. Not only were the small triggers inside, but the 8-2 chart also transitioned for us. It just tells us we're going to go up a little bit higher before we're going to make any more decisions. And again, we're not going long here with all of our synthetic triggers going down and our 14-2 chart large triggers way below. It's not a long look. We have to break out to the upside. If anything, we're waiting for it to either reverse and go back down again, or we're waiting for it to go a little bit higher and have our trigger lines be in a lot clearer position before we take any trades. All right, so now we waited patiently for a breakout. We did have a good feeling we were going to the downside, and maybe some trend trades to the downside could have been taken. I wanted to add this one in there because look at the look. Every trigger line is below and everything is perfect. So what does that mean? We're going to sell the midband, right? So if you take a look at your 5-1 chart, we're going to go short at, either 41 or 45. Probably 45 is the number. So here's your short trade right here. And, I wanted to put this one in here because, again, it's a perfect look and you just lost money. And again, I want you to see, the look was identical to what our winning trades look like. And again, our objective is to try to win in the 70 to 80% range of our trades. Unfortunately, the perfect looks that are going to lose are going to be the same as the ones that win. And you don't know the difference. So again, I just wanted to show you a loser just to show you that the looks are going to be perfect in the same way. Being realistic, I like to show the losers as much as I show the winners. And again, when you go back and you do evaluation of your own trades, you have to say to yourself, did I have the right look? Let's say you're using the tracking sheet. So did I have the perfect look? Were the triggers right? Were the fibs and midbands right? And, if it loses in that situation, you don't beat yourself up too bad. That's what we commonly refer to as the cost of doing business. And it's going to happen. So anyway, that'll get you set up, mentally ready to be ready and prepared to take the next high probability trade that comes your way. And it doesn't take long before it happens. Look at the top. It held resistance. All of your trigger lines are going down, and now we're going short at 46.52. And again, this is, 46.52, and, you can see very quickly we've already reached 46.32. So again, very, very quickly, again, we broke fibs on the small chart, so we should be going down. But again, take a look at this trade. Fibonacci resistances hold. This one's a little bit different than your other trades. Then the triggers roll over on the 14.2 chart. Then you have strong triggers on the 8.2 chart, and you have a 5.1 trend trade to take you down to 32 and another 20 tick. Apology for the last one that lost in this area. And then very quickly, you can see we now have a retest of a prior divergence low on our 14.2 chart. So that tells us that any further trend trades to the downside here at the moment on the 5.1 chart have a little lower probability of winning. And again, look, it's very, very tempting to do trend trade shorts here on the 5.1 chart because it looks perfect. And again, in our experience, once we retest a prior divergence low, it starts to lower the probability of trend trades from the first areas on the 5.1 chart actually working. So, as tempting as it is to sell 46.42 because of the prior divergence pivot stop out, usually we end up going, considerably higher than this area. And again, look, if it does win and your rule says don't do it, don't worry about it. It's okay. These are the ones where people will again beat themselves up and say, well, I should have sold it because I knew it was going down. And again, when your rules say prior divergence lows with more divergence, don't do it. Don't worry about what happens. If it goes down, you'll get another opportunity for another trade later. More than most likely, it'll go up and you'll end up doing long trades later. So we'll see what happens. And I want to add in this last little tidbit here just to show you, had you have sold 46.42 against divergence, you would have again lost 10 ticks. So the rule again saved you from taking the loser. All right, so moving forward, you can see, again, I always like to say, look at what happened up top. Up top, we had a prior divergence pivot stop out, followed by a strong move to the downside and below fibs. So again, when we break fib support, look at your 14.2 chart small triggers, look at your 8.2 chart small triggers versus the large triggers. Look at your 5.1 chart. Where are you going to be selling? What's your sell point? 46.02, 46.01, or excuse me, 48. 48.01 to 48.03. Again, you have to be able to see, really without anybody pointing them out to you, the conditions on the large chart, the conditions on the 8.2 chart, and then the area which we just hit, as you can see on the 5.1 chart. And again, it's when you can put all of those things together, then you really get the right look, you get the right area, you get the right entry at 46.02, 48.02, sorry. And, again, when you've got everything leaning in the same direction and your 8.2 and your 14.2 and your 5.1 coming together, again, you're going to have some really, really easy trades. When you get in at the right spot, you're also able to reduce your risk, per the videos and the other things that we talk about, and really dramatically decrease your risk. And again, you have to think 20 ticks, 20 ticks, 20 ticks. Could it go more? Absolutely. And again, you'll start to get comfortable with the idea of when it's going to go more, when it's not going to go more, when the trigger line and Fibonacci and divergence line combination comes together, and it actually tells you, hey, it's not going to go. And as long as it says it is going to go, and there's not much in the way on the 14.2 chart to stop you, traditionally you're going to end up continuing in the direction of the very strong small triggers. And again, it's always easy to see the trades after the fact. We want you to study the looks after the fact, and then we want you to study the looks as they're happening live. More importantly, study the looks, of the three charts doing market replay. You can literally go in and spend one day and do an entire week's worth of market replay and just build these three charts and just watch them run. You can go 10 times or 15 or 20 times speed and just watch them run. Just say, hey, look, 14-2 chart good, 8-2 chart good, 5-1 trend trade. I see it. And you can see we've also reached, the prior divergence low. So again, 48.02 down to, 82 was pretty easy. And again, with this much strength, the expectation, look at your small triggers on the 14-2 chart. Pretty good expectation we're going to keep going here, even though we had some prior divergence lows. When the triggers are that strong, we usually push a little bit further. So again, just another really nice, very simple, very easy trade for you. And again, you can see you can see now we've made it to Fibonacci support on all of our charts. So when we get to Fibonacci support at all of our charts, this is also one of the stop conditions. So there's two things to look at here. Number one, not only did you hit Fibs, but number two, the distance to your synthetic triggers on the 14-2 chart will really tell you that you have to stop taking shorts on the 5-1. And again, it's very, very, very tempting to want to go short again on the 5-1 chart at 47.86 and right here. And the reason why we can't do it is when the Fibs actually stop the market and we've got, a lot of room back to the upside, that Fib will allow us to eliminate that last loser. And again, it's the last trade in the trend that tends to take a lot of people's money back. And, without the Fibonacci's and without the divergences and without the high probability trigger lines, you're just kind of guessing at where the market's going to turn. So we've eliminated all of the guesswork. If you hit Fibs and the triggers don't break, stop going short. All right, so again, I wanted to move forward a little bit, and you can see the Fibs at the bottom made the market go all the way up. Now, unfortunately, look what we hit at the top. We've just hit prior divergence highs. So the market went all the way up from the bottom, and again, look at the look. The 8-2 chart says we're going to go down some more. And the divergence pivot stop out on the 14-2 chart says we can't do any long trades yet. So again, this gets to be a situation where the prior divergence high on the 14-2 chart saved you from going long on the 5-1 chart. And right now you can see, obviously it's a little quick, Fibonacci support across the board is holding. And again, this is one of our stop conditions. So again, we're not going to do any short trades into Fibonacci support. So what we would like to see, and again, this is a little bit of a different style of trading. If Fibonacci support holds, what you're going to find at tops and bottoms, and again, this is maybe a little bit more advanced lesson here, but if support holds, it'll give you an opportunity at the edges to get in and do some trades to the long side. Now, if it breaks and the triggers get below it, which is not even close to the case yet, then, if we break below 95, 47.95 with any strength, then, we may go to the downside. Right now, when you look at multiple blue Fibonacci support on your 14-2 chart, all of the triggers are above the support. And when all of the triggers are above support, support usually holds. So again, look, let's focus our attention on the 8-2 chart. And again, let's wait until the 8-2 chart says it's okay to go long if that's what it's going to say. And again, you'll see, again, at, excuse me, at tops and bottoms, how this transition will kind of come to pass. And again, this is not the highest probability trade. But again, as you work your way out of just super high probability trend trades, which is where you should really, really focus all of your time and attention, you're going to start seeing the opportunities at the tops and the bottoms and the mid bands and fibs on the 14-2 chart like right now, that are going to provide trend trade opportunities. So look, our 14-2 chart just said it's okay. So if you bought the mid band on the 5-1 chart at 13 and the mid band on the 8-2 chart is at 10, so somewhere between 10 and 13, now that the 8-2 chart has changed, should give us a bounce to the upside. And again, this is a non-traditional type trend trade because technically your 5-1 chart has not yet turned green. So again, you're using the Fibonacci areas on the larger chart, and you're using the 8-2 chart to kind of help you out a little bit. And again, if you get in around 13 to 10, you're really just looking to make it up back to the last high. And again, this doesn't classify as super high probability number one. This is fib trade from the charts after the 8-2 says it's okay. And again, it's a little different style of trading. It's a trend trade long on the 14-2 chart, which you'll see in our trading plan is the number 2 trade. So we have trend trades up top in the trading plan on page number 2, and then we have 14-2 trend trades. So again, using the 8-2 chart, using the 5-1 chart, you still get the same benefit. You're just waiting for the trend trade on the 14-2 and then the 5-1 and 8-2 to agree, and you can see, again, another 20 ticks. All right, so again, the same theme repeats itself. Look at our 14-2 chart. Pivot stop out of a prior divergence low and Fibonacci support that didn't change colors. If that area holds and forces our trigger lines to roll to the upside, guess what's going to happen? We're going to be able to use the same Fibonacci support areas that we had before. Now look how easy. Can you see our trade? Same trade from the mid band on the 5-1 chart. All of our trigger lines are going up. All charts agree. And between 14-ish to 13-ish should be our trend trade to the long side here. Again, look how easy that is to see. Again, this is a number one. There's 14. This is a number one trend trade. All of your triggers are strong and above all of the synthetic triggers on the 14-2 chart. Your 8-2 chart strongly agrees with going up. There's no divergence on your 5-1 chart on the top. So we're going to be getting in at the first area at 14.15. And that will be our long trade. And we'll be looking again, for another 20 ticks. The benefit of this trend trade, look what's in front of us. Nothing. Nothing is in our way on the 14-2 chart. Nothing is in our way on the 8-2 chart. Nothing is in the way on our 5-1 chart. And really, that's ideal. All triggers going up strong, Fibonacci support holding strong, and absolutely nothing in our way. So usually a really good recipe for, the first line we're going to hit is 48.33. And again, if we get to 48.33, that's going to be really close to our 20 ticks. And again, whether it's 14 or 15 the first time, let's just say we stop out the high. There's literally nothing in any of our charts that says we're going to have any sustained move to the downside. So it's longs and longs only. And again, look, there's 35. So there's your 20 ticks. And again, you have to evaluate all of your triggers and all of your fibs and look at your 5-1 chart. You got divergence. When you have divergence, you almost always stop out 48.14. So 48.13 or 10, here's your spot. That's your long trade. So this is your next trend trade long with very favorable 14 chart, still favorable 8-2 chart, and just call it long at 14 or 13. And again, looking for more continuation to the upside. Very, very typical for the market to make divergence at the high, and then they love to come back and stop everybody out before they take off again. So 8-2 chart, small triggers are still above all of our other triggers, you know, we're not even going to worry about this situation. It's always easy to see it after the fact. I think one of the scarier things, especially for new users, is buying on the way down. You've heard the old adage, buy low, sell high. Well, you can't buy low unless you're buying on the way down. So when it's going down into the 48, 14, 13 area, that's really our ideal situation. And as long as we don't change the trend, as long as the trigger lines don't change, as long as the 14-2 chart remains strong, they're just going to have to come get our 10 ticks if they're going to take them. And usually that's not the case. Usually, I say 70 or 80% of the time, when all the triggers are going up and nothing's in the way, you really can't ask for a better situation. And again, just, thinking about the trade itself. If you're long from the 14 area, you've already made 20 ticks. And still nothing is in your way. And you can see how far and fast we went up, all the way to Fibonacci resistance. I mean, very easily 40 ticks to the upside on that one without even a blink. So again, another really, really good, very high probability trade with everything going in our favor on that one. And you can see here it is a little further, 48.13 up to 48.87. So really huge. Now look, one more trend trade coming, right? Do you see the large chart? Notice the transition on the large chart, and notice the transition just barely here on the 8-2 chart. So again, usually one more mid-band trend trade long. Again, because we're going to take another trend trade long, you have to think about the potential of when we get back up into the 77 to 80 resistance area. And you can see, again, another mid-band long, a nice deep pullback on our large chart. And do you see how we pull back up in towards the resistance area? We want to make sure we're at least break even, if not more. And, because we have divergence, because we have resistance, and because our charts are in a transitionary period, we don't want to lose any money. And realistically, if you're still in because of the strength, which is the right thing, and there's 20 ticks one more time. And again, watch what happens. We get this push up, and again, we have to decide, do we want to do one more trend trade? And this is a very, very common occurrence. Look at your 8-2 chart. See how your small triggers are below all your other triggers? The next trend trade, and again, you've got to keep in mind we have divergence on all of our charts. The small triggers are now below all the large triggers on the 8-2 chart. If you went long at 76, you'd have to really put in a tight stop right there. And again, just seeing the transition on the 8-2 chart and recognizing the fact that we're going to go down probably to 58. And you can see if you went long at 76 here, that was a very, very short-lived trend trade with that transition. So again, it's important to see the trades, but also see, because of the transitioning of your trigger lines, that you're going to have very limited potential if you want to take the trade at all. And again, you can see this is really very similar to the same thing we were doing earlier, trying to take a trend trade from Fibonacci on the 14-2 chart. Because we have divergence now on the 14-2 chart, again, it's tempting. Some people will do a short trade at 48.77. And they'll go short at 76 right here, trend trade on the small chart, with the anticipation that we're going to make it from 77 down to 57. And again, you can see the 14-2 chart, divergence plus the small triggers rolled, not the best look. Divergence and both triggers rolled on the 8-2 look. And then a divergence, so triple divergence on all of our charts, which is another one of our stop conditions. So the fact that we have 3 printed divergences on all of our charts allows us to take one trend trade short from 48.77 on the 5-1 chart. Now, we don't want to get too greedy because we're only going to 58. So, maybe an 18 tick target might be warranted on that one. Again, it's not a super high number one trade, of course, but triple divergence across the top of all of our charts is one of our stop conditions. And whenever you have a stop condition and a trend change on the 5-1 chart, it allows you to take one more trend trade short with the anticipation that the 14-2 chart's going to get to the fib and or the mid band, and that gives you 18 to 20 ticks potential to obviously make it down there. So again, just to repeat, triple divergence across the top, trend trade short on our 5-1 chart because of it, and looking to make it from fib resistance, and there you go, 20 ticks, down to fib support. This is where the rubber is going to meet the road, right? If support holds and we transition back to the upside, maybe we'll have an opportunity for a 14-2 trend trade long. Now we're getting a transition. So see the A2 chart. So we're looking for a pullback. And you can see 78 to 76 is probably the pullback area on our 5-1 chart. And we didn't get it. All right. Well, that's okay. It did what it was supposed to do. And you can see obviously now the 8-2 is totally transitioned. So looks like the party to the upside here for the moment is over. And we'll have to see if we can even maintain the trend here to the upside. You can see our triggers have rolled really strong on the 8-2. Our triggers have rolled on the 5-1. Our triggers have rolled with divergence on all of our charts. So guess what? Trend trade short. Triple divergence across the board. So the 49.01 area, 01 to 05. You can see we've got strong triggers here on our 14-2 chart, strong triggers on our 5-1 chart, and you'd like to at least get 01. 01 to 05 is kind of the window, the mid band back to the synthetic triggers. 01 to 04 is a good window. And again, if you had the market flow, this is where you would, need that one more little bump up so the fib to fib oscillator would get to 75 on the 5-1 chart. And you'd at least hit your areas for shorts before taking any short trades. So I need another little push up here before actually going short. You see that fib to fib oscillator down there on the 5-1? Not quite to 75 yet, so the rules aren't quite met. And now they're met. So that's right into our window. So if you're going to be short, that's the spot. And again, 10 tick stop and, 20 tick target. Obviously, Fibonacci support down there at 48.78 is kind of calling on the 5-1 chart, isn't it? And again, this is another one of those situations where you recognize triple divergence at the top, and that triple divergence causes the trend to change on the 5-1 chart, which allows you to take the first trend trade going the other way. And again, if this can continue on to the downside, the mid band on the 5-1 14-2 chart, 48.81, our fib I believe was at 78. Should be a pretty good run for 20 ticks to the downside here. All right, so hopefully this lesson with the three charts and really recognizing where your areas are going to be has been very helpful to you. You can see we may tickle the 49.05 area. Little pivot stop out with our divergence, but that would be more of an add-on in my opinion. Oop, there you go. That did it. Obviously very, very quick, but you can see with that very, very easily some short trades there and really good way to get through the morning here. All right, so just in review, remember when your small trigger lines are transitioning through your synthetic triggers and they're very strong, watch for your first trend trades. When your small triggers are below, watch for really strong number one looks. And then when you get your last trend trade, when your small triggers are inside, watch the management of your trade. And then obviously when everything rolls back up, repeat the process going long. We appreciate you taking the time to learn our software, and we look forward to helping you reach your goals and objectives, day trading Fibonacci areas.